Hello, my name is Todd Mercer.
And I'm Lexi Hadd, and we're the founders and managing partners of Mercer Wealth Management. Hopefully you caught our last video where we went through our 2022 predictions and scorecard. In today's video, we're going to be covering the current market and economic landscape and some of the key issues impacting the markets this year. So Todd, why don't you walk us through some of those?
Well, I think we're having kind of a deja vu moment with the markets right now. Most issues affecting the market today are the same issues that affected the market all the way through 2022. First major issue is inflation. And although inflation has come down from the high in mid-summer of 9.1, we're still in the 6% level, which means that we have another 4% to go to get to the Fed target rate of 2%. The Fed is continuing to raising rates and tightening the money supply. As we said this video, the Fed just increased rates again, 25 basis points this month, and the Fed has forecasted in their minutes that they will not decrease rates on the short term this year, and the Fed is still letting bonds roll off their balance sheet, so they're tightening the money supply. Layoffs in the labor market are starting to become an issue, especially in the tech sector. There's been over 150,000 layoffs in the tech sector, and the labor market, although unemployment is still very low, we're seeing a lot of layoffs in the white-collar world. We think this will be a white-collar unemployment market, not a blue-collar unemployment market. If you have a trade or a skill, you'll probably have a job, but if you're a mid-level manager, you might be laid off. The Russia-Ukraine war escalation is still a major issue and will create a lot of anxiety in the global markets, especially in the energy markets. U.S. politics, we definitely have gridlock this year with the Supreme Court leaning to the right, the White House being controlled by the Democrats, and Congress being split with the House in Republican hands and the Democrats controlling the Senate. China reopening will put inflationary pressures on the market. We've seen that already with energy prices. And you also see, I believe, that with commodity prices and other types of resources. Finally, corporate earnings are decelerating. The Fed rate hike cycles and the tightening of the money supply is definitely having an impact on corporate borrowings and consumer spending and is causing corporate earnings to decelerate. Let's talk about a couple key factors that we look at. First is the S&P 500. Most equity analysts and investment houses predicting say that the S&P 500, the yardstick of the stock market, will finish around 4,000. As we set the market right now, the S&P is around 39.5, and we started in the low 3,800s. So if it pans out this way, we'll finish about 3.25% up for the year, which we definitely agree with that. Next is the bond market. Analysts are predicting that the 10-year Treasury, which is the kind of gold standard of the fixed income markets, will finish around 3.5, and we definitely agree with that.
So I'm hearing, more of the same, and you definitely don't want to miss our next video where we will cover our 2023 predictions for the market and the economy. So make sure to subscribe to the channel and like this video, share it with your family and friends, and stay tuned for next time. Thanks and have a great day.